Have you ever wondered what the best time? The frame for trading is if you've ever asked yourself this question. This is the video for the problem with this question is that it's often asked without respect to what type. As a trader, you or some traders perform better on low time frames with more frequent trading opportunities, while other traders perform best when taking just a few trades a month. So instead of asking what's the best time frame to trade, you should ask what kind of trading you want. To do day trading or swing trading, maybe a mix. Most strategies can work on any time frame, whether it's supply and demand, breakout indicators, ICT. You'll find the same signals across different time frames on charts, be it the 1 minute or the daily. However, how those setups play out will vary depending on that time frame. For instance, the volatility and duration of trends will look very different on the 1 minute versus, say, the weekly. The key takeaway here is you don't have to worry about picking the wrong time frame for your strategy, because almost every strategy can be adapted to suit various time frames. What matters more is how you adjust to those time frames, particularly with things like stop loss placement, risk management, and taking profit targets now. With that being said, should you day trade or swing trade? Should you be looking for the high time frames or the low time frames? This question is kind of one of personal taste and flavor and requires reflection on several factors. Here's a guide to help you determine what you're looking for. As silly as that might sound, this has value. So how active do you want to be on the charts if you're going to day trade? That requires a lot of time spent staring at these candles, while with swing trading, you can have more set it and forget it type mentality. This is going to require a lot less effort. Building on top of that, how often do you want to trade? If you want frequent trading opportunities, lower time frames like the 5 minute or 15 minute are going to be ideal for you. But if you'd rather focus on making one solid trade day, trading is likely not what you're looking for. Let's keep going. Can you manage trades over long periods? This means setting your trades and sticking to your plan without second guessing yourself. Say, if it doesn't play out immediately or over the next few days, swing traders, for instance, often hold positions through weekends, overnight, and through major news events. This can lead to stress and anxiety, and most traders end up losing trades the more that they're stressed or anxious about their position. How patient are you? And this one, you're going to have to be honest with yourself because nobody can answer it for you. Are you comfortable waiting for the market to come to you? You have to be able to avoid jumping in impulsively, and if you can do that, higher time frames are likely for you. I'm going to be real. Though this is one of the hardest things in trading, people don't talk about it, but impulsivity and self-control, as cliche as it sounds, are the keys to success. So pause the video and take a second. Have you asked yourself these questions? Be honest. So once you have it, might be time to experiment. Try trading on one time frame for a few weeks. Gather data, see how it feels. I would recommend paper trading while you do this, but it's not necessary. Basically, just test the waters until you find out what works for you. Because again, there is no perfect answer to what is the best time frame. To trade, trading is just not black and white, and what works for one person might not work for another. This is a reason that you'll find blindly trading setups at other people feed you or copying other people's analysis doesn't really work because trading is very perfect personalized, even if it doesn't seem that way. Now let's actually talk about these time frames that are typically being used by traders. This is going to give us a better idea in general. Experienced traders will use multiple time frames. They don't just stick to one. Usually they'll start from higher time frames and work their way down. This is called top-down analysis, and I cannot stress enough how important this is. Even if you're day trading, you'll be using just 3 time frames for this example. The first one will provide us a macro vitamin W for the overall trend of significant support and resistance. Basically, how to frame the picture that will be your trade swing. Traders typically use the weekly or even monthly for this, while day traders like to use maybe the daily chart or even the 4-hour chart to get their bigger picture next. You'll need a midterm view, and this is used to spot maybe specific setups like key patterns, intermediate levels of interest points of control, etc. Swing traders, again, will use, say, the daily chart, while day traders are going to opt for something smaller, like the hourly chart. And last, we're going to look at our smallest time frame, called the execution time frame or entry time frame. Here you're going to focus on pinpoint entries and exits, looking for confirmation after the price has reached your higher time frame levels for swing traders. They'll typically choose between the 4 or the hour, while day traders are going to zoom in down to the 15 or even 5-minute time frame. So let's look at an example of what this looks like in real time. Remember that this works in all markets. It's not something that you're just going to be using for crypto or stocks or Forex markets. Largely the same, even if their behaviors might be a little different. In this case, let's look at Bitcoin. Let's say that we're a swing trader. If we want to identify the macro trend, then we should zoom out and go to the weekly or monthly time frames. Here we have a much bigger picture, and it will be easier to identify the longer-term trend. So based on what we're seeing here, is the market trending bullish or bearish? Well, by looking at the price action to the left, it has only been making series of higher highs and higher lows. It hasn't broken any significant swing lows. So logically, we're looking at an uptrend. And so we're looking for long opportunities. Don't fight the trend. It is your friend on this time frame. We can look and find some key supports and resistance levels. Our FIB tool will be a big help here. We're going to place it on these swing points to get our 618 or golden Fibonacci levels. Next, let's look at the daily chart. Once price has reached our key level, we're going to wait for some confirmation because there may be times where it doesn't react to that level at all, and it just continues to move here. The market has traded through the level, and then it was bought back up. This created this large wick that we see, and usually when we have a wick like this, we'll often see price return to this area before it makes its real move away. Once we have that, we're going to wait for a new swing high to be made, and this is going to indicate a bullish shift in our momentum. We can mark out this old structure that's been broken through as a new support, and then let's go to the 4-hour time frame in order to look for our long entry. So here, price has reached our level again. You want to see a market structure shift on this time frame. Once all 3 time frames are bullish, that's when we have the best and most profitable trades here. Price has made a new swing high and left behind a fair value gap. We can look to enter here with our stop loss below, and you can aim for levels higher. Thanks for watching, fam. We got a lot of other videos on great topics. Check them out in the playlist like a pro. If you found value in this breakdown, do me a favor. Hit that like button and subscribe to the channel. Your support helps us to keep sharing these advanced trading insights on YouTube. Still have questions? Drop them in the comments and I'll personally help you out. And stay tuned. I've got another powerful concept coming up in the next video to take your trading even further. Until then, trade smart, stay disciplined, and keep learning.